let's talk about the 60-minute E-mini S&P. We talk about this back and filling type of thing. And sometimes we get, ah, so there are two ways that a market can generally top. Most people look at general topping as a climactic action. But sometimes markets can top by the market having distribution by selling tails. Okay. Um, 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 so so what happens? How this happens? So if we go to 60 minutes, first of all, you got to start off, let's say, a daily chart because you want to get a little more of a market behavior. Okay. So we want to get these larger time frames to well, you got to, in this case, we got to work lower to higher, but let's just work higher to lower for a simple stake of the market itself. Just a daily chart. And what we have is a market that needs to overcome this particular selling, right? Because that's the markdown bar. So this 6,900 area, which I point out to you guys, is a key area. Now we're having cluster closes. Okay? Now we're cluster closes. Now, this generally is not absorption until you're a little bit closer to the highs. Okay? So these cluster closes means the market's in equilibrium. Now, there's two ways to look at it. One, we had a nice reverse trend line that the market kind of held, okay, which is okay. Okay. Two, what's the quality of that rally after the selling? Because that's part of the story, right? The selling of the background is part of the story. Okay. So I would say the market overall, we have one, how do we tell the difference? 1, 2, 3, 4, 5, 6, 8 bars to recover. 1, 2, 3, 4, 5, 6 bars. So 6 bars down, 8 bars to recover back. So it's generally a little bit more negative than it's positive. Does that make sense? The speed of the way the market moves is very, very important. Okay? The speed in which the market moves is very, 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 very important. Okay? That's something in which we want to be very cognizant of the markets. Okay, now, as we get the market to do its thing, okay, as we get the market to do its thing, what do we see? Well, we want to see the market structure break down. And how do we do that? Either through the buying climax or through the selling tails aspect. So selling tail aspect, we have market that rallies and fails, rallies and fails, rallies and fails. So you're getting that a little bit here, but it's not that precise. We get a market goes up, sells up. Market, there's nothing, the market sells. So we get these markets that do this, try to go up and then close like this. Okay? Kind of like that type of activity. We need those selling tails to the market. That's part of distribution. Now that generally happens when a market is selling in the background on the secondary test, because the market's absorbing any buying to go selling, so there's selling of the rallies. So selling tails is a way that the market shows distribution of. Okay, it sort of ends up like this a little bit here. You see a little bit here, right? Market sells off. So I talk about the alternate closes, high end, low, high end, low, high end closes. You see a little bit here too. It's not as pronounced as I like to see. High end close, lower mid range, lower mid range. So the closes for absorption are higher mid range and higher. For distribution up there, they would be higher, lower, higher, lower, higher, lower, or lower as reverse absorption. So the daily chart, nothing substantial, but a little bit. It could be absorption, but you get a couple line closes with distribution. Let's go to 240. This is where you see that negative behavior. You see right here? There's actually this bar here. 1, 2, 3, 4. Okay, do you see those the selling on rallies? So that shows up on a 240-minute chart. So that's a little distribution. You see the down bars are greater than the up bars. It's a 240-minute chart, E-minute chart, okay? The down bar is a little bit more than the distribution-wise, a little bit stronger to the downside. Okay, does that make sense? Okay, that's you. Does that make sense? So that's what that looks like. And then ultimately, you get under this buying bar, hitting stops, which comes in around 6803. And if you get under that level, then the market breaks. Okay, so what's the time? So market, as you get lower, lower in time frames, it show up more because you have more bars that go on. You have more bars that go on. So this reaction bar should lead to new highs. Okay, it's not. So there's a little bit of distribution on the 4-hour chart. US on the hourly chart. Okay, and you see it more pronounced, don't you? You see it here, you see it here, and now you see it here. So you are correct as far as that goes. Your breaks are great in your rallies. Now, generally in the stock market, that tends to be the case because people panic more in stocks. Okay, people panic more, so you see that break happening much more. But that's where that comes in. Now, what you want to see is two things now for the bearish. One, the markets show up, stay within a small range here, without the ability to rally, or that reverse absorption low and closes for a while. Okay, could this be some type of weakness on the right-hand side of the market at the distribution? Here's that selling, here's distribution, sort of like a sign of weakness, possible. So what you're seeing is not. Okay, so basically what you see is either a buying climax, which you don't, or you see the selling of the rallies of the market, the deeper breaks of the market versus the deeper rallies, sharper rallies. So it takes like 8 bars to rally, and it takes like 4 bars to wipe it out. 10 bars to rally, 3 bars to wipe it out. You're seeing the wave weaker to the downside than you are to the upside, and you are seeing that now.
Okay, so what's the smart way to trade it?
It's upthrust. So when you get an upthrust of an area, like a 15-minute chart that corresponds maybe 60-minute resistance, sell that. So one of the trades that happens here, the hourly chart, would be to sell this here. That part. Okay, so this is a markup bar. This market says no. Another one would be here, but this one doesn't have enough cause. You see how the market breaks? So it forms a trade range. This flatten out and cause an upthrust. So that one. Okay, now the market's not completely negative. So you're still going to have to respect your resistance level. I mean, your support levels. You have to wait for what happens. Okay. So that would be another way to look at that market. So those are the ways that you have to look at the market as far as that goes, right? All that situation-wise.
Thank you. Thank you very much.
So look at this market overall. So you notice in the weekly chart, see how the breaks are sharper. Okay, so that allows you to sell up thrust because of that reasoning. Now, you haven't really gotten a great upthrust because here it stops, here it breaks. So none of these are really good ones, but this is a good one. And it's good here. Now I would probably hold on to this one if I was short because you have spacing. This one, you're probably in some type of retest. So you need the first break from bullishness. You'd want to buy this early part of a spring, which you never got there, right? But now the fact the market is meandering sideways, now you're seeing more serious of the market breaking down. So this area here, this selling that occurs is almost like the sign of weakness of the market on the right-hand side. If this part happens right here, okay, it's different than what happens here when there's no spacing. Here, this is the first break that you're going to buy the break, right? There's the first break in the market. It's the first retest. We want to buy that one, don't we? The second one, okay, down here. Now, this is something really, this is really important, okay? The market has always little springs, like these are buying tails, right? But it's not really accumulation. It's just within the framework of the trading range. If you take this high, you draw it across, what happens? What's happened with that so far? What did this spring not do? What did this spring not do? It did not make a new high, did it? It did not make a new high. Remember, springs have to make new highs for market, don't they? If a spring does not make a new high and shows off selling to the market, that becomes something very bearish. Thus, selling this upthrust is proper because Gary can't spell. So this upthrust is proper. I'll get it right. It's an upthrust. And it's also SOT. Coming from selling. The breaks are sharper than the rallies. That's how you can tell distribution of accumulation and the buying tails, or the selling tails rather, or the buying tails being weaker than the selling tails. That's how you can tell all that stuff. So that's how you can tell. Okay? So, having said that, what you're seeing on the hourly is correct. Now, if you, that hourly chart will turn into negative weakness on the daily chart if it continues to go lower. And that's what you're seeing right now. See, the break is sharper. Again, breaks are sharper in the stock market. People panic. But within a trading range, they don't panic as much as they do if the market takes out a previous low. Because that's when people start to lose money. In a trading range, people are generally maybe losing money, but they don't want to get caught in markdown. And now the longer we stay down here, let's say we stay here 4 or 5 bars, we're comparing this weakness or strength compared to the back. Every other time we tested, we fairly quickly went up to the highs again. This is like a wounded animal that can't get up. So the weak rally there will allow you reverse absorption to sell the market down. Does that make sense? It's really an important lesson. It's really important. And great observation by you.
That makes sense.
Good.
Makes lots of sense.
Good.
Thank you.
You know what I mean? So look for that. So what you noticed, if you notice, is that we look at. So you look at the whole picture. This is a market that looks like we're going higher, right? And immediately gets sold off. This was up rallies. The speed of the rally is okay, but never makes new high. Then we go back down here. We go back here. It never makes new high. never makes a new high. Not making a new high and selling off on the right-hand side of the market is distribution. Good observation. Great job. Great job in observation of this stuff.
Oh, thanks.